Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Thursday, July 30th. Okay, so yesterday, my view was, what did he say? He said a lot of words, but we really didn't see what he said. And the way that the market reacted, the market didn't like it at all. And I think it hurt. Warsh has been very good. I like his style, I like the way he talks, but he lost a bit of credibility yesterday. And now, I remember when Jay Powell first became the Fed chair, he had a couple of bumpy press conferences where he would say something without really thinking it through, and the market reacted quite badly. So you wonder if this is how little bit of training in the first days on the job, first weeks on the job, and how he'll do in future press conferences. He may have to be a little more careful. But let's see what people said. Basically, Bank of America said the Fed needs to reestablish credibility, increases the probability that the Fed will hike in September, all else being equal. The likelihood of a Fed hike in September is actually a lot lower than it was yesterday. I'm not sure I really agree with that. B of A also added he made a few starkly dovish remarks looking at other inflation indicators besides PCE. He also suggested there could be other tools besides hikes to fight inflation, which is totally the balance sheet. And he said, he didn't imply that the markets have done some of the Fed's tightening work for it. That's absolutely true. A global investment manager says it's hard to see the long-end rally without Fed hikes controlling inflation in the future. We'll see more steepening in the near term. Morgan Stanley, Michael Gapin, used to be Barclays, I think he's very good. Fed credibility took a hit yesterday. It doesn't mean it is not recoverable. He adds that the Fed should not be the referee. As Warsh said, the Fed is a player in the game. The Fed cares who wins the game, and therefore the rest cannot play ball without knowing how the Fed might play the ball. So doesn't think the lack of forward guidance completely will work. BMO, this gentleman, Ian Lingen, I worked with, I think he's one of the top analysts on the street. He says Warsh is content to keep policy rates steady because the market is doing the heavy lifting for the Fed. And to explain it a little further, the Citigroup strategist said, Chair Warsh's ideal world is one where he keeps the Fed on hold while keeping the curve steep. A steep curve should continue to put tightening pressure on the economy, which may tamper inflation down to 2%. So basically, he doesn't want to raise rates, which he may think it's not necessary and not warranted, with which I agree. He also doesn't want to make the president angry, who just appointed him, which is also a good idea. But I think he needs to. Yesterday was just frustrating. He started to answer a question, and then you said, well, what did he say? And this is actually an absolute stellar piece by Anna Wong, who's the Bloomberg economist, who posts on X as sort of, economist rather than as a Bloomberg employee, which I'm kind of surprised they allow, but it's actually really good. And she wrote on X today, a guide to Warsh's rhetorical techniques, since we'll be living with it the next 5 years. He goes, first, replace the question with a broader one, so otherwise known as bridging. When someone asks you X, you answer Y. So someone asks, was today's decision close? You answered, the vote was 9-3. The broader discussion, showed, and it basically shifted his answer to not answering the question, which is why people get frustrated. Another great one, which was asked about conclusions, answer with process. Why haven't you hiked? We spent an inordinate amount of time looking at monetary policy strategy and thinking hard. You explain the process, but you don't talk about why. And then this is good. And Donald Trump does this better than anybody, but Warsh has done it. Create memorable slogans to create rhetorical anchors. Watchful thinking, not watchful waiting. It's a family fight. We're in the performance business, right? Basically people will center on that rather than to provide the impact that you want. And finally, divert attention to markets, but does not provide market analysis. A question was, what are you hearing from the markets? The answer is markets are the best source of information. So you answered it, but you really didn't answer it. And if you watch political debates, that's what a lot of politicians do. Particularly, don't answer question X, answer question Y, and give the answer you want to give, right? Warsh would be a great politician, but this is a great way of looking at it. basically the bond market is not, the bond vigilantes, the long end is not happy with him. But if we get good data, good inflation data like we got today, that might bail him out. So, before we get there, yesterday, huge draw in crude stocks, down 7 million barrels in a very tight Cushing area. Just wanted to mention that. So today, core PCE month on month. Market didn't react a lot to this, because now we are, couple months away from the September meeting. We'll get a little talk at Jackson Hole, but I doubt they'll do anything. Came in June up 1/10 versus a consensus of 2/10. That's these kind of numbers, along with the soft CPI, will say, you know what, we don't really need to hike. Let the long end do the work for us. GDP came in at 1.5 versus 2.1 consensus, but most people are discounting this because this includes imports, and because of imports took 1% off GDP growth. So GDP growth overall generally pretty good. Personal income a little low, but personal spending remains steady. And the personal spending on the quarter was 3.2% versus a forecast of 0.4. So Americans were, real consumer spending, still spending. Inflation outside. Jobless claims last week 187, only revised to 188. It's back up to 197 today against the 200 forecast, still on the low end of the range. That will give them, that will also give the comfort that the economy is doing relatively well. But not that there's that it really needs to hike. Okay, back to Iran, and President Trump hasn't said anything on Truth Social, although he does give interviews. Axios reports that the U.S. military conducted a heavy wave of airstrikes on Iran. You can see here, this is the picture just before the ship was hit and destroyed. Wednesday night came in retaliation for that sneak attack from during negotiations of a U.S. base in Jordan, which were all intercepted. CENTCOM said they hit a lot of IRGC targets in Iran. Hopefully they are. It's our term. He also claimed that Iran had acknowledged that launching the missiles was a mistake and has asked the U.S. not to retaliate. Well, now it's never going to happen. Israel does the same thing. The U.S. does the same thing. I guess South Korea is the only country who doesn't want to provoke the North, then doesn't retaliate. I don't know how heavy it is, but certainly the footage was impressive. Okay, Telegraph reports that the head of Central Command, Admiral Brad Cooper, has prepared a 2-week bombing campaign to cripple its missile capability. Now, you hope this can be done, and the question would be, if you could do it, why haven't you done it before? So apparently it's 10 to 14 days of strikes designed to eradicate the ongoing threat. And apparently Jordan had to shoot down another 5 more Iranian missiles on Thursday morning. The plan apparently is to escalate the war rapidly and essentially say go big approach, reduce the need for the U.S. to use defensive munitions because Iran would have less capability to attack and blunt its missile threat. Again, if we haven't done it, we should do it. The Wall Street Journal has reported multiple times that the U.S. is running low on air defensive munitions. And even the chairman of the Joint Chiefs talked about the shrinking supply of air defense interceptors, which are needed around the world, like in the Taiwan Strait. They cannot be concentrated in the Middle East. The Center for Strategic and International Studies said the U.S. began the war with 2330 Patriot interceptors, and now it's down to less than 800. I don't know if those are exactly right, but you know how many Patriots are produced. You know how much the U.S. has. You figure out what has been launched. That's probably a pretty good pretty good idea. So this is you want to take a look and see if this goes through. If this goes through, I think oil would rise. So speaking of oil, let's take a look at oil. Down a bit today, and we are right in the middle of the lows before before July 7th, and the highs, but before when we're hitting them very hard. So, if there's another significant attack, I think you get a move higher. I don't think you get back up to, well above 100, a bit above 100 here, but certainly rally into, the sort of this area. Gasoline and diesel both going lower, but gasoline prices at the pump are still pretty steady, as the market remains uncertain. Okay, let's talk about Samsung and SK. Bloomberg reports that Samsung and SK answer AI doubters with big numbers and deals. In the quarter ending in June, these two companies generated $104 billion or 150 trillion won in combined profit in a single quarter, driven almost entirely by AI's demand for advanced memory and storage devices. For the full year, SK alone is projected to earn more in profits than it's made in the prior 27 years combined. Just think about that. Think about the money that they're making. But investors, they are unimpressed. SK's stock tanked almost 30% in the last 3 days, and Samsung shed about 19% because of leverage and concern. So the question then is the pace of AI infrastructure spending sustainable? I was really amazed. Bloomberg included, this is an SK 12-layer HBM4 very advanced memory chip. Look at this, 12 layers. Look at how small, how tiny this is. Well, the good news is some Samsung customers are signing binding long-term memory agreements for 5 years. So that's long-term demand that they're locking in. SK has signed multi-year deals with some of their major customers, and the point is because of AI and how AI is going to grow, whether it's a US or China, memory may become no longer a commodity that goes like this, but it's strategic infrastructure that people reserve for years in advance. So if you want it in 2029, you better buy it now, because come 2029, the line's going to be pretty long. And this is what's interesting, and this is graphic. NVIDIA's AI chips consume more RAM, which each new generation. They're a lot more powerful, but they basically eat RAM. So, a high-end PC, probably takes like 50 gigabytes of RAM. But now the latest, NVIDIA chips, they used to do less than 100, but now you're getting close to 300. So you need a lot of these, high bandwidth memory chips that SK and Samsung produce. So SK, right now, SK is actually up 17% in New York, so this will open substantially higher. If we can hold this low here, Wednesday, 1246, we could see a consolidation and then potentially a move back higher. Maybe not with this exuberance, maybe more carefully and a little more slowly. But now, again, if we can hold Wednesday's low, this I think could be a bottom. Samsung, it's the same chart basically. We hold the Wednesday's 189 low, we could see a consolidation. The NASDAQ 100, we looked at it a couple days, straddling the 100-day moving average. Crashed last night, dipped below that, but we're getting a nice bounce up almost 3% today. Let's see how we do. Again, I want to see higher lows. Okay. S&P was down 1.7% yesterday, up 1.4% today. Let's see if we can hold this through the close. The dollar down, I think, 0.7% yesterday, almost 1% today. That's a huge 2-day drop in dollar below 100, and that's why gold and silver are doing better. Now, the reason here is the front end of the bond market isn't really moving, but the back end, is still elevating. It's not actually up 7 basis points. I don't know why they read it that way. It's up about 2 basis points from yesterday, but expect this to continue for a while yet, unless we get some substantially weak data. Crude oil down a little bit, but cautiously. And crypto, it's just sort of quietly a little bit higher. Okay, so S&P 500, led by technology, strong bounce. Can we hold it? And you can see the only thing is, Apple is lower, but that's in front of earnings today. Maybe there's a little bit of profit taking. The stock obviously has done very, very well, with a market cap over $5 trillion. Earnings. So Microsoft really had a solid earnings, good revenue, but really good guidance. Meta, ugly miss on earnings. For them, 14% miss on earnings is huge. Revenue just beat. Microsoft is up 16%, near highs. Meta is down 9%. I think both of these are honestly a little overdone. I don't know if you want to do a short-term pair trade, sell Microsoft, buy Meta. Might be something you might want to consider. SK is up 16%. I think the earnings were very good, but didn't meet expectations, which were very high. Hermes, sort of flat. This is the luxury goods, and so they did okay, which means the high-end spender is still spending. Airbus, has done pretty well. Not much change in the stock. Qualcomm down 1% because they missed on earnings, and they do a lot of phones. Tonight we get Apple and Amazon. Shell has done very well, as up 1.2%. Bristol Myers, the drug company, also up almost 2%. So tomorrow, well, tonight we're going to get Apple and Amazon, and then we get a little data tomorrow. But I want to see how this week ends with all the action we've had so far. So thanks for sticking with me today. I will see you again tomorrow.